Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, September the 2nd. And if you were not watching, we had another crazy day in the market today. Every time I think it can't get any crazier, it seems to just continue. And we have had just day after day after day of new all-time highs. This is another new all-time high here today, 35.87. Now that's the ES. Let me switch this over to the S&P and show you what we've got here. Okay, so this is on the S&P 500 here. 3588.11. Of course, that is a new all-time high. And I really thought we were going to hit 3600 today the way that we were going. This is just constant buying. And notice, you get up here a couple of these points during the day, and it looks like it's a frenzy to buy. Just, rip higher, rip higher, rip higher. Very, very, very minimal pullback, all day. So I thought we were going to hit 3600 right here in the end and do one of these kind of things that we did yesterday. We've been getting this late day kind of stuff, either up or down. It can go either way. But in general, lately it's only been up, and it's been just very, very, very shallow pullbacks. So let's go out and expand this thing and look a little bit. This is a 5-day chart. So if we look, see this low right here, 34.44. This is 5 days ago, so we have been on a tear. There's 3,500 right there, and we really we spent, that was last Thursday, Friday, and we kind of bounced around there. And this is actually the point where I thought we would fail and kind of start coming back down to reality, because this is a frothy market by all the internals and every measure. But instead, we chop, and then we just really took off again. So it's very interesting. Kind of trying to figure out which way this thing's going to go. So if we go here and look at a little bit longer time frame, there's 33.54. Remember, we looked at 34.44 a minute ago, and if we go 20 days, you'll see 33.17. So again, basically, just with the exception of one little flush there, and maybe a little bit there, this has just been pedal to the metal. But what's interesting, and I talked about this in last week's video, is that we're starting to get into this vertical phase here. This is danger zone when this starts happening. And I'm talking to professional trader buddies of mine and trying to figure out, nobody that I talk to is interested in buying it here. I don't really know what's driving this. I kind of want to say it's all the new. We've got tons and tons and tons of new traders coming in. I don't know how many million new Robinhood accounts and all that kind of stuff, and people are making money. It's good. I like this. More people in the market provides more liquidity and all that kind of stuff. I just don't know if that is what's driving this, or if it is still, institutional, buying. But I'm not seeing that really, so I'm a little baffled here. But in either case, let's put this on a 1-year chart. This is the S&P. We're getting further and further away from our moving averages here, which again, as you can see, we've kind of gone vertical here. And this is the SPX. So let's look at the NDX here. It's even more pronounced in the NDX here, very far away from this moving average. This is getting into, again, kind of scary territory. We all know it's going to pull back. What I think most people probably, especially newer traders, may not be aware of how fast this thing pulls back. And if we look here again, let me kind of zoom in here on the NDX here. So, from this point, all the way up has been great. But these pullbacks, they don't look like much, but these can be pretty violent when they pull back, and that'll happen. And I think it'll happen sooner than later, and I suspect we come back down to this level, which is 11.6 on the NASDAQ, probably at a minimum. If that holds, then then maybe we resume, and if not, then maybe we go lower. But we have a couple of milestones to get through first, and the first one is this Friday. We got payrolls. That is a big deal. It will tell the a lot about the health of the workforce and so forth. We have jobless claims tomorrow. What else is tomorrow? Productivity, trade deficit. There's some things coming out in the morning at 8:30 to be aware of, but I don't think that'll make that much difference. I don't think. But I think Friday could make a big difference if our non-farm payrolls come in light or heavy, I guess would be the right term, and we get a surprise one way or the other. We could gap much, we could gap higher, or it could take some wind out of the sails very quickly. But the bigger item is next week we've got Congress coming back from summer vacation, and hopefully we get some news or some movement forward on stimulus package 2. And we're pretty far apart. I think we're $1 trillion apart between Republicans and Democrats. They'll meet somewhere in the middle, I suspect, and and we'll get a deal done, and that will ultimately, that money will flow to the consumer, which pushes the overall economy, which pushes the market. So it should be positive. So for now, we want to continue to look higher, knowing that as we go higher, I don't think we won't continue to go higher without some pullback at some point. And again, I think it's sooner than later. And keep your eye on this 20-day moving average or 21-day moving average or 34, whatever you use. And we'll retest that. And again, that will be the first thing to really keep an eye on. But again, we've got payrolls on Friday. Next week, we'll probably at least get a really good indication if there's going to be progress made on the stimulus package or not. After that, who knows? This thing could just keep going. Although every single person I talk to is scratching their head going, this just doesn't even make any sense anymore. And it's really hard to buy it here because your risk reward is just not in your favor here at this point. So all that being said, I am very light. I've got two in bias. My trading room, I've only got two trades on. I've got one S&P trade and I've got an Amazon trade. And so I'm very, very light and holding on to a lot of cash and just kind of waiting and watching, and I'll pounce on something, when the setup and the opportunity arises. And so I would advise everyone to just be very nimble here. We've been saying this for the last, I don't know, it seems like we know it's been at least a month, because this was August, a month or two of basically straight up. So we know sooner or later, we'll give back a little bit. So I would rather have cash and be ready to pounce on this when it does come back versus trying to continue to chase this thing higher and higher. So again, that's what that's my plan, is to keep light and be very nimble. When you have profit, take it. And also, we have a long weekend coming up. Don't forget that. We've got Labor Day weekend coming up. So I would rather be much more in cash over the weekend, just in case something happens. We always have weekend risk, and with a long weekend, it's even amplified even more. So be careful out there, and keep an eye on payrolls on Friday. We may have a wild day on Friday, and then next week is also, in the next couple of weeks, we should get some movement on the stimulus, and that'll be another big hurdle to get over. So keep an eye on that, and thanks for the time, and I'll see you guys at the next update. Take care.